Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about INSMED INC quarterly report. INSMED Incorporated offers a range of therapies and services for patients with serious and rare diseases worldwide. The company's portfolio includes ARIKAYC, treatment for refractory non-tuberculous mycobacterial lung infections brensocatib, oral reversible inhibitor of dipeptidyl peptidase 1, DP-PONE, in Phase 3 clinical trial for bronchiectasis and other conditions treprostinil palmitil inhalation powder, treatment for pulmonary hypertension associated with interstitial lung disease and pulmonary arterial hypertension, gene therapy, microdystrophin adeno-associated virus gene replacement therapy in Phase 1 clinical trial for Duchenne muscular dystrophy. These therapies are at various stages of development, from Phase 1 to Phase 3 clinical trials. The surge in INSMED Inc. INSM stock price by 177.52% over the past year can be attributed to several key factors. The company's breakthrough clinical trial results for its pipeline drugs, particularly brensocatib and treprostinil palmitil inhalation powder, TPIP, have been instrumental in driving investor confidence. The successful Phase 3 ASPEN study for brensocatib, which demonstrated statistically significant reductions in pulmonary exacerbations, has positioned the drug as a potential game-changer for non-cystic fibrosis bronchiectasis patients. Additionally, regulatory advancements and strong financial performance have further contributed to INSMED's stock surge. The company's submission of a new drug application, NDA, for brensocatib, along with anticipated launches in major markets, has generated significant excitement among investors. Strong revenue growth, attributed to both ARIKAYCE and the newly launched BRINSUPRI, has also bolstered investor confidence. Analyst upgrades and positive market sentiment have further fueled the upward trend, as well as speculation about potential acquisition opportunities. Overall, INSMED's robust pipeline, regulatory progress, and financial health have been key drivers of its stock price appreciation over the past year. Net income and profit margins have experienced a decline due to several factors. The main contributors to this decline include revenue reversals in Q4 2022, decreased reimbursement for certain products such as ARIKAYCE and BRINSUPRI, increased costs associated with prior authorization, and failure to negotiate acceptable prices. Additionally, lower reimbursed prices in France and Japan have also impacted profit margins. These changes are expected to continue affecting net income and profit margins unless addressed by the company through negotiations or other means. The company's debt level has undergone significant fluctuations over the past year. Initially, it decreased from $1,103,382 to $539,719, indicating a substantial reduction. However, subsequent reports show a slight increase in September 2025, with a total of $163,854,000. The redemption of convertible notes in 2025 may have contributed to this change. Regarding interest expenses, there has been a notable decrease over the past year. Initially, it decreased from -$20,382, 2024, to -$63,196, $9 million, 2025. Additionally, paid-in-kind interest capitalized decreased from $19.2 million in 2024 to $0 in 2025. The company's interest expenses have continued to decrease, with a reduction of $0.7 million, 3.2%, compared to the same period in the prior year. Overall, while there are some fluctuations in debt levels and interest expenses, the data suggests that both have decreased significantly over the past year. Management is projecting continued losses and substantial future cash requirements. However, they anticipate generating positive cash flow through successful commercialization of marketed products and clinical trials. The company plans to reduce operating losses by expanding its product offerings, increasing market share, and initiating Phase 3 trials for new product candidates. To achieve this, management may raise additional capital to fund operations and development. Concerns over inventory buildup, but not supply chain disruption. The financial summary of a recent report highlights growing concerns over inventory buildup within the company. This concern is evident in the significant increase in inventory levels from $98,578 to $120,965. Furthermore, write-downs of inventory were recorded in both 2024 and 2025, totaling minus $34,677. The company's periodic review of inventory for expiry and obsolescence suggests a proactive approach to managing this issue. However, despite these concerns, there is no indication of supply chain disruption within the report. This suggests that while the company may be struggling with excess inventory, its supply chain remains stable and unaffected by any disruptions. That concludes the financial summary for INSMED INC. Feel free to comment below, and I will be happy to answer them when possible.